Welcome to the August edition of the Agri Commodity Markets Monthly. My name's Graydon Chong and I'm a senior analyst here at Rabobank. August has been relatively volatile for commodity prices, with the S&P Agri Index falling 11% from its July highs. This has really been driven by a broader sell-off of most of the agri commodities over the last month. We've certainly seen this in row crops, with both corn and soybeans lower month on month. Really driven, and the momentum being driven there by the USDA August WASDE, which came out with yields for both corn and soybeans above market expectations. The corn yield was printed at 169.4 bushels per acre, with the market expecting something closer to the mid 160s. Our current outlook is for a US corn yield of somewhere between 164 and 166 bushels per acre. And we do think that there is chance for more volatility going forward as weather develops in the US. A pretty similar story in soybeans. The USDA monthly came out with a soybean yield of 49.4 bushels per acre. We think this is a little bit high. We are currently forecasting soybean yields somewhere in the vicinity of 47 to 49 bushels per acre, although we do note that August is a very important month in terms of setting soybean yield potential, and there is potential for the cooler and slightly wetter weather forecast for the next 2 weeks to have a positive impact on yields in the US. For wheat, we do expect prices to have maybe a little bit of upside, as we do feel that seasonal lows are being met. We do note that there is a rather large crop in Russia at over 78 million tonnes this season, which is a bearish factor, particularly for mid to low protein wheats. We do see wheat developing into a two-class market where we see good support for higher protein wheats, driven by the drought conditions that we've seen over the US plains over recent weeks, and also the drought spreading into parts of Canada. I'll now pass to Charles for an update on the softs.
Thank you, Graydon. My name's Charles Clack, commodity analyst here at Rabobank in the Agri Commodity Markets Research Department. I'm going to talk to you today a little bit about the softs market, starting with sugar, where we hold a fairly bullish view, forecasting prices to reach 15 cents per pound by Q1 2018. The reason for this is primarily Brazil, and we see currently that sugar prices are trading below the ethanol parity. Now, this is the level at which Brazilian millers will choose to produce ethanol over sugar. In addition to this, Brazil is entering its rainy season, and during this period we see ethanol being favoured over sugar anyway. So if we combine these two factors going forward, we see actually that Brazil will be favouring ethanol production, and therefore that will directly impact the amount of sugar produced in this region. In addition, if we look to India, we see some tightness domestically in this region, and up until their domestic harvest in November, there is a high chance that India could look to the global market to import sugar to just cover them over for that period. On the cotton market, we hold the opposing view. We're very much bearish, and we forecast prices to reach 65 cents per pound by Q1 2018. The reason for this is we look to the US, and we look to a phenomenal crop coming out of the US, primarily due to acreage increases, and with the USDA forecasting 20.5 million bales, versus what trade thought was around 18.8 million bales, it really is going to be a phenomenal crop. That said, right now, globally, cotton supply is fairly tight, and there's still some way to go before we reach the confirmation of US yields, and before that crop really is in the bag. So until then, we do see price support, but once this US crop comes in, we do see pressure on the ICE number 2. Furthermore, it's not just US that we see more cotton. We also see acreage increases and production increases, I should say, really, in China, Pakistan, India too. So really more available cotton next year in 2018, and therefore a fairly bearish price outlook. Thank you very much for watching. If you'd like to view any more of our research, please access far.rabobank.com. Thank you.